dry up of liquidity. I mean, although it's a huge market, and we still do, they say, $3 trillion a day, what really happens is the overall chief traders for all the major banks, they're just not willing to hold risk anymore. And that's really where I've seen this market take in my opinion, a considerable change and as it used to be in the past. These chief traders used to take positions and they would hold risk. So they did provide liquidity consistently, and the markets did provide more movements. And I think that's probably one of the things where I would say that I've seen some change in this market from the previous years. Well, that's normal, Ram, for somebody who, if I know you're trying to become and do more of the active trader stuff. I know that's your approach, but that under these market conditions, sometimes, active traders, you will find that, you'll go through an entire day putting on a lot of trades, only to find at the end of the day that you worked a lot and your points don't show it. And in fact, at best, you're at break even or a little bit positive, or hopefully just not much negative. But again, but that's what you do. You do it consistently. All right, here we go. I'll get back into that in a little bit later. Come on, let's see if we can get up, get up. If once you guys start exercising more of an active trader's approach, what you'll find is that there's going to be days when you do really well, because it's like anything else. The more it's a numbers game. The more numbers you're able to execute, the more your chances. Especially if your system is solid, the more you increase the opportunity to generate more points. But also it's a numbers game, and that if you take 15 trades, out of those 15 trades, hopefully 10, 11, 12 of them were successful. The others that you lost on, you managed your losses, and again, you end up with a very profitable day. The problem is when you have a day when the market's not cooperating, and so you take, maybe 10 trades, and out of the 10 trades, you end up with, 6, maybe positive, 4 negative, or 5 and 5, somewhere along the lines. And so those days you find it a little bit more difficult to get yourself up ahead. But because you do it day in and day out, and that's, what you practice, and then, there will be days when they do add up. But that's what I try to get across to everyone, an understanding. Because if somebody who comes into this room is trying to follow someone who's an active trader, number one, they won't understand the majority of the trades that person's doing. That's number one. But even if they did, the ability to keep up, it's almost like I've always stated, that it takes time to get there. So, the idea is slowly practice your way there. And then when you go live with small accounts, so your losses are minimized, because you will make a lot of mistakes. And until you work those mistakes out, the idea is don't put too much on the table, so that, again, your losses are maintained at a minimum. And that's really the way to go. But I know it's, more often than not, it's not what everyone wants to hear. Everyone wants to hear it, so, this is easy and I can put in a lot of money and start making a lot of money fast. And my approach to this is more, if it takes you 6 months to a year to learn something, and you're going to get to where you can actually make it a business and you can really make a living out of, isn't it worth it then to be patient and wait and develop the skills to do that, rather than try to make money now fast and set yourself up for the long haul, where you won't be able to do this as a business and you won't be able to make a living out of this as you choose to.